With the official launch of XRP perpetual contracts by the American exchange, Gemini, traders of the cryptocurrency now have the chance to increase their exposure to it. By the way, is Ripple's CEO right to have struck back at the Dogecoin founder owing to a discussion regarding the relevance of joke coins? We will also be examining the TD sequential indicator, which, amid the current adverse market trend, recently identified a new buy signal on the XRP chart. Finally, when the regulator asserted that cryptocurrency assets themselves reflect the embodiment of an investment contract, aficionados for the cryptocurrency space have identified certain contradictions in the SEC's legal position. Gemini has now disclosed the rationale behind its most recent XRP-focused social media campaign. The exchange announced its intention to introduce everlasting contracts for XRP in a post on X this morning. Notably, the advent of XRP perpetual contracts gives traders leverage, enabling them to trade beyond the spot. Because they are perpetual contracts, traders are free to keep their positions indefinitely, provided they have sufficient margin to cover their losses. Because of this, by trading the contracts on the Gemini derivatives platform, Gemini traders can increase the size of their positions, which could increase both their gains and losses. Gemini has acknowledged that the platform isn't accessible in the United States, the United Kingdom, or the European Union. The most recent event happened less than half a year after Gemini, following an official listing, started spot trading for XRP. Recall that in August 2023, a few weeks after XRP obtained legal certainty, the exchange, which had never permitted XRP trading, listed the asset for the first time. The Gemini team launched a social media campaign around XRP before the listing announcement, which sparked rumors of a possible listing that eventually came to pass a few days later. The XRP perpetual contracts were introduced after a comparable social media effort. 3 mysterious postings about XRP were posted at the beginning by the official Gemini X account, urging the wider community to remember the asset and implying that it would soon see development. Amidst the mentions, a few prominent members of the XRP community sparked conjectures about the possible development. One well-known member of the XRP community, Ari, for example, claimed that the development might revolve around a Gemini joint venture for an XRP ETF in Europe. Gemini posted a puzzle shortly after the posts that led to XRP. Their most recent statement affirmed that the XRP perpetual contract holds the key to solving the puzzle. Although the introduction of everlasting contracts is a positive step, the social campaign's nature made expectations greater. Some members of the XRP community have expressed their unhappiness as a result. Some others think it is a significant development. Famous media figure Zach Richter responded to the announcement by saying exchanges were solely focused on the XRP community and their business. Remember how Bitstamp created a similar buzz around XRP in August of last year when community members were waiting for a major announcement? But when the exchange merely revealed a 2% annual percentage yield (APY) loan program for XRP, sadness swept the room. Remember to click the notification bell and subscribe to our channel if you want to be the first to know about new developments about XRP. Following Brad Garlinghouse's comments about Dogecoin at the recently finished World Economic Forum in Switzerland, a dispute broke out. The topic of debate was the necessity of detailed industry regulation that made a distinction between meme coins and utility-driven tokens. In particular, Brad Garlinghouse, the CEO of Ripple, expressed contempt for meme coins. He cited Dogecoin as an example of a cryptocurrency project that has no purpose. He said, "I don't get it," making a what's the point motion that questioned Dogecoin's applicability to the cryptocurrency space. Billy Marcus, aka Shibatoshi Nakamoto, the co-founder of Dogecoin, took to X to defend Doge. Marcus specifically rejected Garlinghouse's viewpoint, saying that it is incorrect to characterize Dogecoin as essentially distinct from Bitcoin. He brazenly declared that the ticker symbols are the only significant distinction between Doge and Bitcoin. Marcus offered a conceptual comparison to support his claims, likening Dogecoin's demise to favoring one fiat currency over another. "This is like saying, I get the euro, but the yen is nonsense," he said, underlining the parallel. Interestingly, Billy Marcus removed his response at the time of reporting, but some parts of it are still accessible to the general public. In reply, Ripple CEO Brad Garlinghouse accepted the perspective put out by Marcus, noting, "I understand the point you are making and agree with the point in some ways." He did, however, present a counterargument by offering what he thought was a more appropriate analogy. Garlinghouse specifically made a comparison between Dogecoin and the US dollar and the Zimbabwean dollar. This comparison points to a notable difference in terms of worth and utility. In essence, he aimed to prove that although the currencies of Zimbabwe and the United States are both called dollars, their uses and market values are very different. This counterargument challenged the idea that Bitcoin and a meme-themed coin like Dogecoin are similar by highlighting their significant distinctions. Additionally, XRP's value dropped by more than 8.18% during the previous week as it gave in to bearish pressure and settled at 52 cents on the market. Since December 23, the asset has seen an even more significant decline of 14.15% as market participants have kept selling XRP. Renowned market analyst Ali Martinez, however, has seen a buying opportunity in the ongoing sell-off, pointing to a bullish signal that might portend an eventual recovery for XRP. Martinez made notice of the change in a recent X post. Martinez, who is well known for his proficiency with market chart analysis, emphasized the usefulness of the TD sequential indicator in forecasting the movements of XRP on the 3-day chart. Over the last 8 months, this indicator's accuracy has been demonstrated on multiple occasions. In the middle of October 2023, while XRP was trading at about 48 cents, there was an example. Using the 3-day candlestick patterns of XRP, the indicator detected a buying opportunity during this time. XRP achieved a 59% increase by early November 2023, breaking into the 71 cents range. Similarly, in December 2023, the TD sequential indicator demonstrated its dependability once more and predicted a downward trend for XRP. This forecast came true, causing XRP's value to drop precipitously by 36%. Notably, using a series of candlestick counts, the TD sequential indicator predicts probable trend continuation patterns or reversals. In this instance, as Ali Martinez pointed out, the 3-day charts by signal indicates that XRP might be ready for an impending upswing. Said another way, market participants wishing to invest in the digital asset may find that XRP's current market value of 52 cents is a decent entry point. Martinez disclosed earlier this month that the market for XRP was showing an increasing pattern. He was optimistic that it would propel XRP closer to the $1 mark. Most importantly, he saw a buying opportunity in the pattern, with a target price of $1.1 in sight. Now for our day's primary focus, regarding the SEC's contradictions, what is Judge Torres' opinion, and may cryptocurrency assets itself serve as a form of investment contract? Remember to click the notification bell and subscribe to our channel if you want to be the first to know about new developments about XRP. In yesterday's legal session, which focused on Binance's bid to have a securities regulator enforcement case dropped, this was the SEC lawyer's argument. To put things in perspective, the SEC accused Coinbase and Binance of breaking federal laws in June by running unregistered stock exchanges and listing cryptocurrency assets that were considered investment contracts. The SEC classified 12 cryptocurrency assets as securities in the Binance complaint. As an alternative, Binance and Binance U.S. requested that the lawsuit be dismissed by U.S. District Judge Amy Berman Jackson in a dismissal motion. The SEC asserted that all assets, including cryptocurrency, passed the Howey standard, a well-known security standard in the U.S., according to reports from the courtroom during Monday's hearing. The Commission's attorneys argued that the cryptocurrency tokens cited in the Binance case constitute investment contracts and that the assets are the embodiment of a security, according to reports from the hearing. The crypto community, however, took issue with the SEC's reasoning since they saw serious flaws in the notion. Notably, in the SEC v. Ripple lawsuit, attorney John Deaton represents thousands of holders of XRP. He offered his thoughts on the development. The attorney for XRP holders said that the SEC initially introduced the embodiment theory in response to his request to step in and support XRP holders in the Ripple legal dispute. The XRP traded, even in the secondary market, is the embodiment of those facts, circumstances, promises, and expectations, and today represents that investment contract, the SEC said in a quote from their response. Lawyer Deaton drew attention to the fact that the SEC has not provided any case law to back up their embodiment argument. Eleanor Terrett, a journalist for Fox Business, was one of the people who also made comments on the SEC's erroneous claims. The pro-crypto journalist pointed out in an X post yesterday that 2 federal judges have ruled that a token is not a security in and of itself, Judge Annalisa Torres in the Ripple litigation and Judge Jed Rakoff in the Terra case. She emphasized that in both instances, the SEC accepted this fact by characterizing the tokens as nothing more than computer codes. Terrett claims that the Ripple and LBRY instances demonstrated the SEC's erroneous legal doctrines. In the Ripple case, for example, the judge criticized the SEC for putting out erroneous claims on Ripple's other XRP distributions. The judge stated that the SEC had previously claimed that because Ripple's other payouts were given in exchange for non-cash considerations, they constituted the sale of unregistered securities. She went on to say that the SEC eventually modified its position, asserting that Ripple's previous XRP distributions were indirectly sold to the public to increase the company's liquidity. Now, please share your opinions with me in the comments section. Verify that you enjoy the video, and don't forget to click the notification bell and subscribe. This is a huge assistance for the YouTube algorithm. Additionally, by forwarding this video to as many people as you can aid in enlightening others in the same way that you have been enlightened. Guys, let's spread this word far and wide. If you truly love cryptocurrencies, make sure to read all of our material. I'll see you tomorrow to discuss the most recent news that affects our community as a whole.